Francisco Blanch is here. He's the head of B of A's Global Commodity and Derivatives Research. Joins us now. So the question is, people may own it for speculative purposes, but at what point does the train ride end, if you will, if that's the case, right?
Right. Well, look, I think at the end of the day, Andrew, this is about supply and demand. We know the supply of Bitcoin is capped at 21 million coins. The supply growth rate of Bitcoin is halving every 4 years. So there's less and less Bitcoin coming in. So ultimately, it's exactly what you said, is when does the demand for the cryptocurrency stop growing? And ultimately, that's a question of adoption. So if adoption starts to falter, I think prices are going to come down pretty quickly. But if it grows a lot more, then we have a different problem, which is the energy consumption of crypto, which is one thing our report highlights, is that prices, at the end of the day, drive energy demand, drive CO2 emissions. And the question is, do we really need to have such a polluting instrument at the time when we're trying to essentially go to net zero emissions in 30 years here?
Okay, but I think the question that we should be asking here is, let's say it's a speculative instrument. And by the way, I think it's almost impossible to say right now that it isn't. But if you believe that it is some form of digital gold, it sounds to me like your view is that the current folks who have money in Bitcoin won't actually hold it when it gets to some kind of steady state that feels a little bit more like gold, because you'll think to yourself, I don't have a 10x opportunity going on in the future, therefore then I sell, therefore it pushes the stock down. I'm asking you, at what price does that happen? Right.
Well, I mean, I think it's impossible to tell, but one thing I'd say about prices in Bitcoin is that, remember, in 2017, 2018, we had a big run-up in prices that was led largely by retail investors flowing in. This time around, there's been a lot more institutional investors coming through into the market. And we also know there's a lot of hedge funds in this trade. So I think if the hedge funds somehow smell that there is downside risk, they're all going to try to get out. And the other thing that we observed from Bitcoin in our report is that it's driven by liquidity to the upside. And that's something unusual. Most asset classes, Andrew, when there's more liquidity, prices stabilize. In the case of Bitcoin, there's more liquidity and prices go up. That's kind of a very, very peculiar
what do you think the downside risk is? At $58,000, since I'm struggling to get you to give me an upper end of this, what's your lower end of this?
Well, I mean, the reason I can't do that is because we don't really have price targets in our report. So we haven't really kind of come down to that. But one way to think about downside risk in Bitcoin is the actual cost to produce it. Remember, it takes a lot of electricity, it takes a lot of computer chips, and today we think the cost of production of that Bitcoin, the cost of mining it, so to speak, is right around 20,000 per coin. So that sets, in a way, some reference to the actual cost. There's no real intrinsic value, but that's one way to think about it.
But if it look, $20,000, if it were get back to 20, that's still actually higher, meaningfully higher than where we were even 6 months ago. So it's interesting because literally a year and a half ago, you could still mint these coins for $7,000, $8,000 a coin.
Right, and of course, costs of production are variable, Andrew, because they are pretty much lined up with the amount of hash power coming into a network. And they are somewhat linked to prices. Today, if you wanted to buy mining equipment, you really wouldn't be able to get your hands on it for probably another year, because there's such a shortage of chips globally, and also the companies that produce this mining equipment don't really have any more capacity to deliver that to you.
I don't want to go too deep into the weeds, but one of the things that's actually to me bullish about Bitcoin relative to the climate issue, and I just wrote about that in the New York Times 2 weeks ago, is this idea of some of these off-chain networks that are being developed, like a Lightspeed and other things that are happening, so that effectively people can transact without being on this very energy reliant blockchain, if you will. Does that not is that technology not a bullish sign for you?
I think it is in terms of potential adoption. And I saw your article in New York Times, great article. I think medium term, and I get this question all the time, aren't we going to go to a fully kind of renewable energy driven blockchain and Bitcoin network? And I say, yeah, it's possible. But look, I'm an energy analyst by training. I've looked at energy for more than 20 years. And I can tell you, when you can't just shift overnight, you can't just snap your fingers and drop all your carbon emissions. It's going to take many, many years. And my particular worry in case of Bitcoin is that if prices rise too fast because we adopt it too fast and we don't let that technological advance kind of play through, we're going to end up with a major environmental problem 12 to 24 months from now, because of the speed at which this is happening.
Right.
But you're right. I mean, medium term, there's solutions that are starting to show, and that could help bridge this problem in 5 or 10 years, but not overnight.
Clearly we're seeing retail get involved in Bitcoin in a major way. We're starting to see hedge funds get involved. Some major banks are now allowing clients to get exposure to it. Morgan Stanley recently, but exposure through funds, not directly, which I think is an important distinction. The question I'd ask you is how you think about corporations, pension funds, endowments, and the like, thinking about putting some of this on their balance sheet, and whether you're hearing more of that, or you think that's pausing out after, obviously, some of the more famed names, including Elon Musk with Tesla doing something like that.
So I've heard more noise about it, but the one thing I'll say is that when I ask the question, why do you want to have Bitcoin in your portfolio? What are you going to pay for, or in terms of your input costs if you get Bitcoin? If you're a corporation, I'm not talking about investors. Investors have a different set of parameters when you make decisions, but corporations. And the answer is always the same. It's like, oh, we will have it in case it goes up. So again, speculation, which I mentioned. And then some people mentioned hacks. If we get hacked, we may want to have some Bitcoin to pay for the hack, which I'm not even sure is necessarily a legal reason to have it, but that's one reason has been argued. So again, speculation, or maybe you're facing a hack. That's the reason all corporations agree on us in terms of why they would own Bitcoin. So investors have different priorities. So that's a different conversation.